This program is brought to you by the Practicing Law Institute, a nonprofit learning organization dedicated to keeping attorneys, professionals, and accountants at the forefront of knowledge and expertise.
Hello and welcome to the Securities podcast, keeping it fresh and staying wonky on the latest securities, regulatory, and enforcement developments with a practitioner's perspective on the stories you should be following. As always, I'm Chris Eckimoff, and I'm here with my good friend, Kurt Wolf.
Hey, it is good to have you back, buddy. We missed you on the last episode. How you doing?
I'm okay. You know, food poisoning's nothing to fool around with. You know, my wife, I've been making my own meals recently, and so she's got a little bit of a smirk on her face when I got under the weather about how much of a culinary artist I might be, Kurt. But thanks for picking up the slack and putting out a great episode on what fiduciary duty really is.
Yeah, it was a fun episode. It was good chatting with Knut Rostad. But glad to have you back. Glad you're on the mend. You know, I haven't seen you for a while. I understand last week you were out in Chicago at a PLI internal investigations program or seminar. How was that?
It is one of my favorite things to attend every year. For those of you who haven't attended, I would encourage you to go check it out at pli.edu. It is a really walkthrough of about maybe 90 minutes to an hour of literally animated scripted content that describes this business with very fun character names describing these individuals who are stealing trade secrets or potentially, you know, releasing press releases before time. But the best part is after you watch, you know, maybe 2 or 3 minutes of that animated scenario, you've got a panel of 4 or 5 people who live and eat, sleep, and breathe this all day. And they talk about the issues with the CEO, whose name was Oligarch. Kurt, if you picked that up, oligarch there. So things like that come in. So really great discussion. And I think the best part about it was we had probably about 25 people in the room and I think over 100 virtually. The questions took up the vast majority of it, which always makes for a more interesting presentation. But I know that Kurt, was not the only attendee at an industry-focused event. Talk to us about where you got into last week.
Yeah, that's right. So while you were out, in Chicago, I was attending the 89th annual Security Traders Association Market Structure Conference in our nation's capital. It was actually my first time attending the conference, and I got to say, Chris, it was an incredible event. And not just because of the first class goodie bags. They were good. Everybody was walking around with their little white Robin Hood bag. You know, it had a copy of Bob Pisani's new book, Shut Up and Keep Talking, which we should totally steal for
that is
our
a great line.
Right?
That is a great line.
But no, I mean, the lineup of speakers was remarkable. It featured an SEC commissioner who's a friend of the podcast, some high-profile television personalities, esteemed members of the press, just a truly impressive group of people. And, more importantly, at least, for me, and I believe the attendees, the panel discussions were really substantive. These are really meaty conversations. And I know that sometimes we like to get in the weeds on, equity market structure issues.
We have been accused of that, yes.
But these folks, Chris, it's the who's who of market structure.
That's excellent.
And they got wonkier than we ever will really quickly. But that was good. I loved it. They were talking about things like payment for order flow, best execution, crypto regulation, a world where there may be, 24/7 trading, ETFs. Just they really covered the landscape. It was a fantastic conference. And at the end, I came away feeling, really energized and ready to learn more. So much so that I thought, hey, wouldn't it be great to have someone from STA come on the podcast and bottom line some of this stuff for us so our listeners can benefit from some of that great content that I picked up in person. And as luck would have it, Jim Toes, who is the president and CEO of the STA, and he was the unofficial MC of the Market Structure Conference, he accepted our invitation to come on the show, and he is here with us today to share some of his takeaways from the conference. So I'm excited to talk to Jim, but Chris, before we do that, why don't you just give us a little bit of background on Jim for our listeners?
I would love to. As you said, Kurt, Jim Toes is the president and CEO of the Security Traders Association. We'll be using the acronym, not a part of our bingo card yet, the acronym STA to talk about the organization, which is a grassroots trade organization which serves individuals employed in the financial services industry. In his role, Jim maintains STA's relationship with U.S. regulators and congressional policymakers. Since assuming his role in 2011, STA has written more than 50 comment letters on a wide range of issues under the regulatory oversight of the U.S. Securities and Exchange Commission, the Department of Treasury, the Commodities and Futures Trading Commission, FINRA, and the Senate and House Financial Services Committees. And Jim is a frequent contributor to STA's monthly newsletter, as well as its Taking Stock and Lighthouse columns online. Jim has over 30 years' experience in the securities business, including 18 years as a managing director at Bank of America Merrill Lynch. Jim has also served on various best execution and market structure committees and has testified before Congress. I cannot think of a better person to help illuminate the plumbing of market structure on this episode today. Kurt, Jim, welcome to the Insecurities Podcast.
Thanks for having me. I really do appreciate it. I mean, I think as you'll find, I'm pretty passionate about the industry and also about the role of STA in it, and so an opportunity to kind of talk about STA is I'll never pass up an opportunity to do that. So I really do thank you for having us on.
Of course. Well, Jim, challenge accepted. You want to talk about STA? Tell us a little bit about STA. What does STA do?
Yeah, so we're a trade association. We've been around for 89 years, and like most trade associations, we do a lot of things around education and advocating on behalf of our members. But I think what makes us different than most associations in the financial services industry is that our members are individuals employed in the industry, right? They're unlike, Morgan Stanley is a member of SIFMA, but Morgan Stanley employees are members of STA. And that is a pretty big difference. It kind of drives the types of education that we do. We care about career development. We're just trying to make people's lives a little bit easier in an industry that's getting more complex every day.
Yeah, that is an interesting feature of your organization. I mean, I would note too that you do have some affiliates that appear to be organizations out there. I thought it was really cool at the very beginning of the conference last week. My career, it just so happens, has included a bunch of work in Canada, and so the conference opened with playing both the Canadian and the U.S. national anthems, which I think speaks to your membership and some of your affiliate relationships. But why don't you tell us a little bit about some of STA's affiliates?
Yeah, so we have around 24 in the U.S. and Canada, and we do love our Canadian members. And what it is like these affiliate boards. Obviously, they tend to be in areas where there's a lot of financial services. They are run by volunteers who are employed in our industry. And what happens is when you join a local affiliate, like in Chicago, you become part of the national organization. So at the local level, it's a lot of volunteer work. At the national level, obviously, I do get paid to do this. And so that's where it's kind of different on. So that really does contribute to, that grassroots term, that Chris used to describe this in the opening there. I mean, that's grassroots, I got to tell you, that meant nothing to me until I started in this organization. Our ability, as we'll talk a little bit more about just kind of how DC works, but our ability to get a meeting with a congressional member always starts with our ability to say that we have an affiliate in your district. This affiliate has 120 members from 12 firms, and that really provides us the ability to get a meeting with a representative who sits on the House Financial Services Committee, and then that meeting has benefits for all the affiliates. So we leverage that across all of it, and that grassroots nature of the organization, like I said, I did not understand how powerful that is, a strength of the organization until I started doing this job.
Kurt, I've never heard of another conference that plays national anthems, let alone those that should start every hockey game in the NHL. So kudos, Jim, on a great opener.
It was cool.
But before we get into some of the detail, and we'll talk about some of these topics and specifics in a few minutes, but I'm interested in a little bit more about the policy areas that maybe the STA gravitates towards, right? You talked about meeting with folks on the Hill, that advocacy element. Where's the general focus of STA?
Yeah, so it kind of starts with like the value add that we kind of provide. It's like we view ourselves as like a filter or a curator on all things in DC for firms that don't have like an organized regulatory or governmental resource to them. So I know that kind of sounds like, we raise awareness, and that sounds pretty soft, but it's a much more meaningful and serious role that we play as far as helping them just be a curator and giving them a heads up on it. And also, we also view our role too. We want to be proactive, right? There's a lot of rules coming across in various stages of their lifestyle, and it's really hard for some of our members to track them. So that's another value area we're more proactive on. And now, as far as our priorities go, listen, I think our priorities, kind of driven by some of our guiding principles, right? So we have guiding principles that obviously we all hear regularly in our industry. We advocate for due process and transparency into the rulemaking process, industry engagement, anecdotal, empirical data, all that stuff around rulemaking. And if we see a policy, you could almost throw a dart at any of the SEC proposals that have come out in the past 11 months where we do feel there's been a failure in a respect for the rulemaking process and the lack of due process around it. So that would be an area like where that's a general thing that we do advocate for. Like I said, so really what I'm trying to say is like we have guiding principles, and then that kind of then when an issue comes across the table that falls into one of those things, that's where we tend to jump on it. So, competition, reasonable barriers to entry, those are all areas, and there's an example I could put under each one, but that's kind of where we strive for.
No, that's great, and definitely a meaningful mission within your constituency with your membership as well. Let's get to the good stuff. I want to hear a lot about this 89th Annual Market Structure Conference that ran from October 12th to 14th at the JW Marriott in D.C. We've got the tagline on the website of the Inflection Point, which I think is an interesting discussion in terms of the headliner. But the one thing I need to harp in on first is, Kurt, did you attend the Thursday morning yoga session as a part of the conference? I know you were telling me you had a bad back a couple months ago. You better be taking care of yourself.
I did not. I was on the train, which did not help my back. Maybe next year.
Opposite. That's not written in the agenda. But all kidding aside, Jim, what's the focus of the conference? What's the attendee makeup? What are the objectives that this 89th now conference is bringing forward this year?
Yeah, listen, I mean, it's a very diverse group, both geographically and also skill set. Our history is in the equity markets. Okay, that's where our story starts. And when you think about all the technological advancements and the electronification that we've seen in the markets, it kind of started in the equity world first. Okay, so we've had a lot of our members have kind of transitioned from equities into other areas, be it ETFs, options, and now we're seeing it in crypto, or where it's just this fundamental belief that because of the technology that we have in our marketplace today, that the ability for capital to kind of flow across asset classes with little friction is really one of the things that makes our marketplace just so dynamic and so deep, and the best in the world on it. So it's all good, but the challenge here is how do you cram all that content into like a day and a half? And that's really it's really hard. Like you said, it gets heavy. So it is an overwhelming task. It is our marquee event. It is overwhelming to plan it, to make sure that you're making the absolute most of the time there. We have no breaks. I know it's going to be a criticism. I've stopped sending out the post-conference survey.
The evals, yeah.
Oh my God! You don't even have a bathroom break. Well, you're all adults. I don't think you need to be told when you have to go. But it is. Like I said, it is the marquee event. But I got to tell you, the thing that does make it easy for us in the planning is that there's two things. One is that it's always on our mind. It's not front of mind, but it's always on our mind about the conference next year. The conference. What are we going to do? But the second part is like if we're doing our job right, the other 11 months, 3 weeks, and 2 days out of the year, then planning this is not that difficult. And the planning is we know what issues we want to talk about, we know what issues we've been engaged with people on. Therefore, we know who are the subject matter experts. So really, the success of the event is really driven by what we're doing when the event is not taking place. And but it is pretty overwhelming. So I'll leave it there.
Yeah, I mean, you're right. It did get pretty heavy, but one of the ways that I think you really helped bring that content across in a way that was, digestible for everyone in the room, right? Because different people in there know more about some topics than others, but I felt like everybody was with you. And it's because, I said this up top, you had great speakers. You had a really great lineup of panelists. And I just wanted to give you a second, because I know you work hard to get those folks to come in and do this and give their time. Just want to let you highlight a couple that maybe you were excited to see up on the stage this year.
Sure. I mean, listen, we're very happy to see Commissioner Peirce come up. It's always nice to get a couple of CEOs from publicly traded companies come spend time with you. So having Doug Sifu and Ed Tilley was always value add. Dan Gallagher obviously has been a regular at our conference since since he was a commissioner. We've always maintained a relationship with him. But I think the one that we were, I don't say most proudest about, but I think the one that we got most excited about was the new director of the trading and markets at the SEC, and then that's Director Zhu. So I think because I'm sure. Listen, I know you had SEC speaks, and that was one thing. Getting Gensler's lieutenants to kind of come out in public and talk has been a little bit of a challenge for the broader industry to talk in person. So we really felt that, getting him to come in person, we were really happy to do that again, probably after having several meetings with them on various topics via Zoom. So I think there was a trust factor there that he was good with. But I got to tell you, the one thing, if you are planning a conference like this, it is the speakers, it's really the moderators though. And we get, if you look at the list of the moderators that we have, the majority of them are market structure geeks. They're publishing they're publishing this stuff. This is their Super Bowl as well. Getting an opportunity to interview some of these people one-on-one. They really take it seriously. They're conscientious about it, and they really do make the event.
Yeah, I agree with that. Actually, I was impressed, I have to say, by how well things flowed, right? Because you're right, there weren't breaks in between. But your panels didn't run over. That's down to the moderators doing a good job. But then you also, you just had some good conversations. Like John Ramsey of IEX, he's a friend of the podcast. The conversation with Commissioner Peirce was great. And, he kind of kept it moving along. He kept it friendly, right? Which is good. So yeah, a lot of credit to the moderators. You're absolutely right, Jim. So let's get into the actual content a little bit. We've been kind of talking about the STA and the planning, but we want to talk about some of the key topics or some of the themes that ran through the conference that stick out in your mind. You've had a few days to reflect on it now, and so Chris, why don't you kick us off with a topic, and let's let Jim go.
Yeah, we might as well start from the top. The SEC's regulatory agenda was a major feature in many of the discussions at the conference. I don't know if my numbers are completely up to date, but I think in fiscal 22, we're talking about 30 new major rules, as well as almost 20 more that are expected to come in the next fiscal year. Kurt, you and I have done multiple episodes, touching on the top line of many of these rules, some of them being outdated and some of them dealing with new technology and new issues in the market. So, Jim, kind of open season for you. What were the key discussions about the SEC's regulatory agenda and their areas for improvement at the conference?
Yeah, listen, it obviously came up a lot. Just the not just the breadth of issues and areas that these filings are on, but also how deep they go. It isn't. Some of these rule filings we've kind of felt were almost like three filings into one on it, and how they kind of, the frustration here, obviously, and I know you've spoken about this, the short comment periods, a lack of industry input, how one has a major impact. The outcome of Rule A is determine what you're going to say about Rule B, but you're looking for input on Rule B when you don't know what the outcome on Rule A is yet. And that's really some of the general frustration. But I think some of the things that kind of did pop up and is around, it does seem at a high level that there's this desire to kind of create, one set of rules for everybody. If you're a regulator, I can understand it from a regulatory standpoint. Your life is a lot easier if you have one rule set. They'll argue that it's more efficient. We'll just say that you're just trying to make it easier on yourself by having one set of rules for all participants, maybe doing some similar activity here. But, listen, whenever you take like a one-size-fits-all approach, it always leads to problems on it. So, we're just not, some of these rules that have come across, like the FINRA one around, reproposing amendments to Rule 15B, 9-11, for giving certain exemptions to market makers. That's a classic example of what I just kind of described, where you're trying to, you kind of have this, market makers and options that are registered at an exchange or multiple exchanges. Now you want to make them become FINRA members, and you're kind of painting it under the brush that, one set of rules for these types of participants. And it's been our history that you don't get one set of rules replacing three. You just put another rule on top of the existing three. And then when you have that one size fits all, it spills into an unreasonable barrier to entry. It makes it really hard for, especially in the options market making place. It's been our experience that when someone leaves that industry, they're not backed and filled by somebody else. Like, they're just gone. They're gone. And that's because the barriers for new participants to come in to be an options market maker is just so hard to come into it. Even Doug Seafood touched on that when he in that speed round. Virtu's having a hard time competing in the option space. It's a high barrier to entry to get all the technology in place on it. So those are kind of listen, it's at a high level. We don't like some of these, new terms, getting hit with new terms. We don't like the common peers. And we don't understand it. Like, we just don't understand, like, what is the, like, what is the issue with equity marketplace that really needs to be fixed? We still don't really know what the problem is on a lot of these issues that they're going after. So. Sorry.
Yeah, I noticed that too. I mean, the sort of
on that. I know I went on a tangent, but did I answer it?
Yeah.
yeah.
All right.
No, that's good. I mean, it's one of the things I noticed too, Jim, was this concept of how one size fits all rulemaking maybe doesn't fit at all. The thing that I recalled was people talking about best execution and how that maybe means something different to institutional investors versus retail investors, and yet the thinking is that maybe they're all going to have to play by the same rule or set of rules. So I mean, it was an interesting takeaway. I'm glad I picked up one of the themes you did. I think that means I was paying attention. But one of the other themes that I thought kind of ran through many of the panel discussions, and frankly, this was the same at SEC Speaks a few weeks ago, but it had to do with digital assets or crypto regulation. It came up time and again on these panels. And some of the things that I heard people saying, I mean, really starting with Commissioner Peirce, just sort of kicking things off with that first fireside chat. She said to John Ramsey, look, what we need is collaboration and clarity, not more regulation by enforcement. The folks in this room need to understand the rules. And a lot of people picked up on that throughout the conference, this concept of we need clarity. So, I mean, tell us a little bit more about that. What did you hear? What might be some of your members' concerns? What do you think could be a good outcome here?
Anthony Denier, from the CEO from Webull, when he spoke, he mentioned about that the majority of the new clients that are signing on to the Webull platform, which is a mobile app, they're crypto traders first. And so that's their first experience now. And that's something that everyone is kind of grappling with, is that, this new investor, how are they coming into our marketplace and what experiences are they getting? And they're coming from the crypto space. A lot of these new investors are coming in, are trading crypto first, and then they come into our marketplace and they don't understand things like, I don't get it. I put my order in. Or how come I'm not getting a fill on my Tesla? Well, it's 2:00 in the morning. It's not 2:00 in the afternoon. I sold my stock an hour ago. Where's my cash? Well, there's a T+2 settlement in equity. So I think that's really that is impacting everyone. Even asset managers, exchanges, whether it's crypto or the blockchain. How are we going to compete for these new investors? What has to be provided to them? How are we going to facilitate 24/7? But the importance of the roadmap is really for the people who are obviously providing the picks and shovels to enable this marketplace to flourish. And I'm actually amazed it's gotten as far as it has without any regulatory rule book on it. And it is scary because it's at an inflection point. It's gotten so big, which is one of the reasons why we gave the name for the conference. It was like some people will say inflection, some people will say it's on the tipping point. And there's a difference between an inflection point and a tipping point on something. But they're at this point now where it's like, just telling, if you're just telling these people to come in and file, like, that's not good enough. Like, you gotta be kind of putting out some rules of the road here, at least in the beginning. Stable coins. I thought Zach Dexter was very good on Friday talking about that. We got to get some clarity on stable coins. So let's start there. That seems like it could be, a low-lying fruit area. On it, but they can't move forward on these things until we get some regulatory leadership on it. Someone's got to lead this, because it's going to take some congressional action on it. And DC is a big vacuum. If you don't step in to fill a need, somebody less qualified is probably going to step in and fill it instead of you. So it really would be good to have some leadership here on which way this regulatory regime should look for digital assets.
Jim, I think that's a good point. And I really, kind of latched on to your thought about the transition from the entry point of investors in the crypto market to kind of a more traditional equities market. And I liken it to something my friend, who's an elementary school teacher, told me a few years ago about keeping kids' attention in the classroom. And it's hard because those kids leave the classroom and go home and they're on an Xbox, with a visual that's moving constantly and talking to somebody in Asia, in English and just kind of jumping around in every direction. Then they're asked to come and sit quietly and write something with a pencil and paper in their classroom can be difficult for that transition. So I can see exactly all those complaints of, hey, my crypto trading is happening instantaneously when I get my Kurt coin, which Kurt, I'm still waiting for that to take off. If that hasn't gone up recently, I haven't checked yet today. And then moving over to buying and selling Tesla, or even something, God forbid, even more boring like General Electric or one of the more stable kind of blue chips from years beyond. And that taking multiple days, right, from an attention span perspective can seem like an eternity. One of the things we want to talk about, too, is at the conference, a discussion of one of Kurt's favorite acronyms, I know, DEPs, Digital Engagement Practices, or colloquially called gamification. For those of you listening to this episode who maybe need a refresh on gamification generally, you can check out the Insecurities podcast, episode 52, where Kurt and I spoke with Nebraska College of Law professor James Tierney, who's written extensively on the idea of gamification. But, Jim, I want to toss to you, where do you see DEPs or digital engagement practices? How were they brought up at the conference, and what were the issues discussed there?
Yeah, so listen, it's a hard area to really, it's freedom of speech. It's around it pulls in so many other bigger issues here. I don't know. The part that was kind of surprised that didn't come up was like, I am encouraged that the SEC went after some of these influencers, and I think that is a positive role to go down. Okay, but I think it is really hard to hold broker-dealers who offer a self-directed platform to investors, to have them play some type of a enforcement or, gatekeeper. I guess that's the term that they, they are a gatekeeper, but, to self-directed investors in this area of meme stocks or whatever we want to call it, right? Yes, I mean, obviously that there's a role for them to be playing as far as, what information are they pushing out? But it isn't just that. It's also when we're talking about this gamification world, of this meme world, I could be getting my information from a completely different area, away from my broker dealer, and then behaving in such a way on the self-directed platform that the broker dealer doesn't know I'm over here, that I'm surfing the web all day and stuff. So I think kind of the two approaches is, what is the broker dealer doing in this area, and then what is reasonable as far as what can be expected of him in their ability to police it. So it's certainly not going away. And like I said before, the education part, there were obviously benefits to some of this stuff around helping people become educated on the product, but it is still concerning. Like, is it really leading to more trade? Listen, we do believe that the more you trade, odds are it's going to be eating into your profits, the transaction costs around it. We like the folks to be educated, and and I know the regulators they have a big test guide. I don't know how to go after that. I would just kind of take a couple of victories here and there. Go after the influencers. Try to at least demonstrate an understanding that broker dealers will have, self-directed platforms. They're all not doing these push-out notifications. So if you look, maybe, at least acknowledge that.
Yeah, Jim, and just a brief pause here. For any of those influencers out there listening to the Insecurities podcast, feel free to reach out and become a guest, especially if you have over 40 million followers on Instagram. Sorry, yeah. Kurt, go ahead.
Wow, I can't wait to see who takes you up on that.
Yeah, the
Definitely,
DM from that's going to be great.
Should at Chris, not me. That's at Ekimoff CPA. No, look, I thought that the conversation around digital engagement practices or gamification was really interesting, and in particular, Dan Gallagher's comments about gamification, and there was this really interesting moment during his remarks when he said, look, I think there is, and this isn't a direct quote, but he said, I think there's a little bit of a mythology building up around what's happening on these self-directed apps. And, I looked around the room and saw a lot of nodding heads and, I dare say some quiet applause, right? Because I think that's certainly the industry's perspective, is that they're not necessarily encouraging people or enticing people to go out and trade, and that, like you said, they may be getting information elsewhere. But I guess I wondered what your thoughts or reaction were to this idea that maybe there is no problem, maybe it is just a myth. If I'm a regulator, I'm looking in this area. Okay,
as a general statement, regulators don't like to see like wide spreads in anything. as it relates to how investors, their experience, or what's being provided to them. So, I mean, we'll use like, I know that the FINRA came out with their, complex products and options request for comment. And to be clear, it's not a rule filing. They're just looking for information, which I think is a responsible way. But when you think about how people come into the options world and what gets made available to them on a self-directed platform, the spread between some broker-dealers just provide that options disclosure agreement, which is kind of like a legal document, and then there you go. You go through it, you fill out the form. If everything is filled out properly, you're good to go. Other firms go to the other extreme where they provide an enormous amount of educational material for investors, not just to learn how to trade options, or it's really tools to help them be able to assess how good they are or how bad they are on it. So that's a pretty big spread. One investor comes in through door A, they get a legal document. Another investor comes in through law to the other door, and they get an enormous amount of educational resources available to them. As a regulator, should I be looking to maybe tighten those guardrails? Should this entity on the left have to do more? Obviously, their competitor is doing more, so there must be some area around it. So it's a tricky area, but I do think that it is the regulators have to be looking in this area. I heard Dan Gallagher's response on it, but that's why we had Robert Cook speak right after Dan, so that the regulator could give their viewpoint on it.
Yeah. That was actually really great because, Dan kind of sat right down front there, and they had a back and forth. No, it's cool because they acknowledged each other in the middle of their remarks. Which, look, I think that's good to see. There should be a dialogue.
Something. It is good to see it. I mean, listen, there's, it's okay to have difference of opinions. We got to keep the lines of communication open. But you are right, though. I mean, because Dan came down after he spoke, he sat next to me, and he's like, grabbed me by the leg, and he's like looking up at Robert Cook. He's like, "Isn't this great?" Like, he gets to somewhat tease Robert. Afterwards, I'm like, God,
No, it was great. It was great. I love it.
Never one to stay quiet during a panel discussion, Mr. Gallagher is. So, but that sounds like a great back and forth at the conference, and something I'm sure the attendees really enjoyed. We talked a little bit earlier, too, about another topic, best execution. I know, Kurt, you and I have hit on this a couple of times in our podcast history, most notably with our episode 21, we entitled Trading Fast and Slow, which had actually one of the moderators, Jim of the conference, John Ramsey of IEX, came on the podcast alongside our friend Dan Eisman of MFS to talk about, high-frequency trading generally, but we did get into some of the trading and mechanics of filling orders. And with the discussion of best execution at the conference last week, the potential for auctions and, the downstream effects of that, and how retail investors may be a little bit confused or, hear the phrase best execution, and that can mean something different to a lot of people. So enlighten us a bit about how that conversation went at the conference last week, Jim.
So you kind of touch on two areas that enlightened me during it, right? So I did. So the topic of best execution came up. We already have an existing standard that FINRA that FINRA owns, and they do modify it as markets change. So when Robert Cook was asked the question, what do you think about the SEC coming up with their own best execution, standard? I thought his response was very, eloquent. He compared it to owning a puppy. If you get a puppy, it takes a lot of, you just don't. It requires a lot of care, as the puppy grows and stuff. And I thought that was very enlightening on it. Listen, the best X topic is always going to be, I think, about just providing information for investors. But it is disappointing when we think about how much work we all put in for filling out those reports and putting them out there in the public domain, and how little retail investors engage with it. That's a little disappointing, because we still believe in putting the information together and putting it out there in the public domain. But at the end of the day, the retail investors, I think what they're looking at, these self-directed ones, they're looking at a price on a screen. They like the price on the screen. They hit a button and they're executing their trade at or near or in between the price on the screen, and they're happy with it.
Yeah.
So they don't really see it. And another thing too is like sometimes the execution. This is another thing that kind of gets lost in the conversation. Is that the relationship that the retail investor has with that self-directed platform? It's much broader than just the buying of 10 shares of Tesla. There are other things that these broker dealers are providing. So they're looking at it from the perspective of like this, and this investor experience with the entire firm on it. So I think that's it is. I think we're providing a lot of information out there as an industry. Wish the retail investors would take more advantage of it, but at the end of the day, they seem pretty happy with that. They're seeing a price and they're getting it on the screen. The one thing you did touch on was auctions, and as far as the equity markets, and I think the part that resonated with me is that, and it should resonate with all of us, is that whenever we have these conversations in equity market structure around PFOF or self-directed investors, it only gets kind of held from the perspective of like a Robinhood and Citadel, and or Schwab and Virtu, and I think what is getting lost here is that every major broker dealer has a self-directed product offering that they offer to their clients. My account is at Bank of America, and I have my financial advisor and I have my self-directed platform that's available to me. And when Doug Sifu said that there are 240 to 250 broker dealers who are sending their self-directed order flow to Virtu for an execution, regulators need to listen to that, because this conversation is so much bigger than just Robinhood and Citadel. All right. So when you start bringing in a new way of executing a trade, like I know this term auctions keeps getting order by order competition through an auction mechanism. Those other firms, you got to be thinking about it from the perspective of like that self-directed investor, like Jimmy Toes, who has an account at Bank of America, and what's that going to look like, and what type of reaction are you going to get from Bank of America? But those firms, they're sending orders to Virtu, and firms like those internalized. It's a huge transfer of risk. Once they send the order over there, the risk is off their books, and it's also very cost effective for them. If you start changing how orders are handled, and now you change that relationship between the order entry firm and the order execution firm, and now that order entry firm is now going to either have to take on more risk because they're going to have to make more a decision, or they're going to have to take on more cost by connecting directly to those venues. It's going to be. I just hope that they appreciate that, because it's not going to get the response that they're hoping for.
Yeah, I mean, I agree with that completely. I think that maybe has less to do with what the investor or the user is going to see or even know about, right? We are really now in the market plumbing. But I agree with you in terms of the potential impact of that kind of rulemaking. I think that one of the things that the panels focused on a lot, though, was this idea of the user experience, the investor experience. And we've touched on it a little bit just in terms of, Jim, you saying the investor sees the price, they like the price, they want to buy at that price. A lot of that has to do with the investor experience, whether they're using an application on their phone or they've logged into an account online. And you touched on it a little bit too, with respect to people who entered the markets through a crypto trading platform and maybe want to transition to trade more traditional securities, equities, or options, whatever they want to trade. One of the things that folks talked about a lot in terms of user experience is when they can trade. And again, you hinted at this a minute ago, but it seems like maybe there is an expectation by many investors that they ought to be able to trade, 24 hours a day, 7 days a week. And currently they can trade basically when the sun is up Monday through Friday, right? With some exceptions, right? There are some places where you can trade 24 hours a day, 5 days a week. But, I wonder if you can encapsulate that issue for us a little bit and tell us where things might be heading.
Yeah, I mean, I got to say, it's a fascinating area, because one of the things that gets me really curious about this idea of 24/5 or 24/7 is that it seems like it's very rare when you can kind of come across some new area of growth where the smaller, more nimbler firm may be at an advantage to the bigger firm, right? So I think some of the people that kind of criticize this or speak down to it, saying, there's not a lot of activity that occurs off U.S. hours and it's not good, and they kind of poo-poo the idea. they usually come from a large firm because they know what it would take internally to kind of build out that, to build out that type of infrastructure to support it. So I do get curious because it does seem like some of the people that are coming into this space tend to be, new startups, ATSs with very senior people with very impressive resumes who have built this. All right. I mean, listen, I agree with, I don't know who said it. Not a question. I think it might have been Steve Quirk from Robin, who said it's not a question of yes, is this going to happen or not? It's just a question of when. That people are you're gonna be able to buy these things 24 hours a day, whether it's 5 days a week or 7. There's a very good chance that some 16-year-old doesn't even know what a market open or a market close is. And maybe there's benefits on it, but again, regulators are going to have to really look at this. I mean, what is that? What does best X mean after 4 o'clock? That's how are orders handled after 4 o'clock. They're going to have to really look at the order handling of how these orders are being handled. They're going to have to look at what's available, what disclosures are being made. But it's coming. It's coming.
Jim, we've covered a lot of the great content that's come across the 89th conference from STA, but would love to hear, Jim, we've touched on a few topics. What was one big takeaway for you that maybe we haven't discussed yet on today's episode? What was your favorite part of the conference? Besides the relief, right, of 11 months, 3 weeks and however many days of buildup, finally getting this in the books. But, what did you take away from last week?
Listen, I mean, I like the fact that it's a lot of content that we throw at people on it. I like the fact that people that are in the room, so many of them are competitors, right? They compete not just among broker dealers competing with broker dealers, but obviously, between and among market participants, right? Broker dealers and exchanges, and it's just nice that you can kind of provide an environment for them to kind of come in and meet and talk and have a drink and you even hear a couple of them laughing from time to time. So I think that's kind of what I kind of. That is part of the goal here, is to get people with different business models in a room talking. We just think that's, that discourse, whether it's just a general conversation or a full-blown argument, that produces the best outcome for everybody on it. And creating family moments too. I mean, the Dick DeMia Pactum Award, really happy to give that to Larry, Tab, and the philanthropy as well. But I think those are the things that kind of make us really proud about how the event turns out.
That's excellent. And unfortunately for me, I found out, Kurt, you were attending. You were sitting in a seat, and we were texting back last week. And Jim, I know this is not the only thing that STA focuses on throughout the year. Where else can we find more information about programming from STA or anything else coming up on the calendar?
Yeah, so I mean, listen, our affiliates, like I talked about, the affiliates tend to have like one big event every year, and then they have a couple of, light touch events, we call them. It's on the website, on the events page. I think we're kind of done for the year. Denver. We have one coming up in Denver. They like to do one in the first week in December. So, they're good events, man. I always recommend, if you're doing business outside of, to plan your travel around it. That's what I kind of tell people. It's like, listen, if you plan your travel around it. If you got a client in Denver, odds are, there's going to be an STA event kind of taking place 3 times a year there. Why not go and get 2 birds with one stone? Or 2 drinks with 1 beer,
Yeah, I love it. We'll definitely include in the show notes a link where folks can find out about some of those different programs around the country. And if anybody wants to go to the one in Denver, let us know. Maybe we'll be there. Chris, you up for a trip?
Jim, if you're buying me 2 beers for 1 beer or whatever that was, I'll be there.
Oh yeah, one every. I guess you guys really do put on a good podcast. I mean, there's a lot of the content you put out. You guys have good chemistry together. I really do find the stuff that I don't listen to all of them, but I do. I probably get to around.
We'll cut that line, Jim.
Yeah,
we'll cut
that line. No, but it's good. I mean, there's so much that goes into changes to our industry occur from so many different factors: competitive, regulatory. Lawsuits, accounting, so on, and so I do look to you for, when I see it come up and I see what the subject matter is, I definitely listen in. I appreciate the opportunity today.
Yeah,
that's great. Thanks for joining us.
Appreciate the kind words. Yeah, thank you so much for coming on the show.
Thanks for joining us for this episode of the Insecurities Podcast, and a special thanks to our guest, Jim Toes of the Security Traders Association. As always, we want to hear from you regarding your thoughts, comments, and topics for discussion on future episodes of Insecurities. Please use the hashtag InsecuritiesPod on Twitter or LinkedIn to join the conversation. You can find me at EcomoffCPA.
And I'm at enforce_update.
Be sure to subscribe, rate, and review the Insecurities podcast wherever you listen. Be well, everyone, and we'll see you next time.
Thanks for tuning in.
Thanks for listening to Insecurities, a podcast from PLI, the Practicing Law Institute. PLI is a nonprofit provider of authoritative professional services training and continuing education. In an increasingly complex business environment where intricate corporate structures reign, Insecurities can help you make sense of it all. A special thanks goes to the producer of Insecurities, Daniel Peinitz, as well as hosts Chris Ekemoff and Kurt Wolf. For more information about PLI's SEC Institute, or to view hundreds of hours of fresh and relevant on-demand programming covering changes within the security sector, visit pli.edu/membership and sign up for a privileged membership. These recorded materials are designed for educational purposes only. This podcast does not constitute legal, audit, tax, consulting, business, financial, investment, or other professional advice, and it does not create an attorney-client relationship. Please consult a qualified professional advisor before taking any action based on the information herein. Furthermore, the views and opinions expressed in this podcast are solely those of the individual participants. These views are not the views of the hosts or their employers. Users of this podcast may save and use the podcast only for personal or other non-commercial educational purposes. No other use, including without limitation, reproduction, retransmission, or editing of this podcast may be made without the prior written permission from PLI.